Hey y'all, we'll go ahead and get started. I am excited to talk about property taxes with you guys this evening. It is April 15th, which is income tax day, but it's also kind of the start of our property tax season in Texas. So if you have property in Texas, if you're a homeowner, if you have rental properties, you probably have received your 2026 notice of appraised value. If not, you can go on to the County Appraisal District website in the county where your property is located, and we'll talk about that here in a minute, and check your values because awareness is the first step. So my intention for property tax management and for you with your own properties and or portfolio is more than taxes. It's in order to manage your property taxes in order to maximize your bottom line. Because the goal here with everything we do is to maximize what's coming through after all your expenses. So keep more of what you earn legally and strategically. So we want to be within the bounds of the law, but those expenses that we can manage, like property taxes, we're going to go ahead and do what we can in order to maximize the money that you keep. A little bit about my background. I am a real estate investor. I work in property tax as well for almost 2 decades. So it's a good overlap. I have a portfolio of rental properties myself, and I do real estate sales and investments. But I also work in the property tax sphere as a consultant and have since 2009. So I guess 17 years. Time flies. But I work primarily in commercial property. Although I do residential for my own portfolio and for client services as well. So all of that overlaps. I've worked across the state of Texas that whole time. So there's very few counties I have not worked in for property tax reasons. And all of them are pretty similar with some nuance on kind of where you submit your data, where you go, who you talk to, that sort of thing. But there's a pretty good process in Texas. We have a pretty good system. So if you're stepping into this for the first time or maybe reconsidering how you're going to do this moving forward, we've got a great system. So I'm here to just kind of walk you through that process, what that looks like at a high level. And then if you get into it and decide, you know what, I really don't want to spend the time, I want to get somebody to handle this for me. There are plenty of residential property tax consultants out there that would gladly take that for a fee. Usually it's a contingency of tax savings fee. I think some of them might charge a base filing fee for homesteads just because there's not a lot of potential tax savings depending on the property value, but typically 25 to 40% of your tax savings would be the fee that they charge. So if you decide just going to let somebody else do it, it is still good to be aware of the process so that you can kind of manage what they're doing and make sure they're doing a good job for you. But honestly, it's pretty simple. If you have a small portfolio, you can totally do it yourself. So let's get started. The question that we're here to answer is, are you overpaying on property taxes? So many Texas homeowners are, mainly because of a lack of awareness. So a lot of times, particularly if you just have your residential homestead, your primary residence, you get your property tax notice, but perhaps you have your expenses in an escrow with your mortgage company and like, oh, well, that stinks. They raised my value again, and so my payment's going to go up, but what can I do? Well, you can do something, no matter if it's escrowed or not. You, as the property owner, can protest that value. So this is a relatively quick trick to improving your financial bottom line. There's not a whole lot of time necessarily, unless you have a really complicated case. I would estimate from filing to getting your data to having a hearing, especially if you're doing a virtual or remote hearing, maybe a couple of hours. So you can save hundreds to thousands potentially in your annual property tax expense with a low output of time. And again, it isn't just about taxes, though I have made a career fighting taxes and I'm happy to pay as few as legally possible. But it's more than just taxes. It's about your entire financial picture. So anything that impacts your monthly cash flow, affects your long-term wealth building efforts, and reduces your financial burden is a positive. So let's go ahead and pursue that because every dollar saved here is a dollar that you can invest, save, or propel you towards your financial freedom destination, which is the goal in all of this. This is just an overview of what property taxes go towards. So as much as I'd like to say, hey, get rid of all the taxes, that's probably not going to happen. So in Texas, we do not have a state income tax. So local revenues are funded through property tax and sales tax. So even though every legislative session there are efforts to reduce or remove property taxes, the idea of it going away completely as an expense is pretty low because without a constitutional amendment, we can't have income tax. So then your sales tax would have to go up substantially, which is a more regressive tax. So it's here to stay, though there have been efforts to reduce the burden, particularly for residential homesteads, not necessarily for rental property portfolios, but to kind of reduce the rate at which you're taxed. But as long as we want services, we do need some taxes. So you pay your taxes to a local tax collector, and then they distribute those funds to the local entities, the schools, cities, and governments that use it for those services that we all enjoy: schools, roads, hospitals, fire departments, all that sort of thing. But the system in Texas, this is an important distinction that sometimes is confused. It's a bifurcated system, two-part system on purpose. So the intention behind the way that our property tax system was designed is that we have a separate valuation department and taxation department. So the county appraisal districts are the ones who value your property. That's who you're going to be dealing with in the process we're talking about now. Your tax rates are set by those local entities. So it's going to vary depending on where you are. You can't necessarily go into your appraisal district when we're talking about this protest process and say, you know what, my taxes went up from $10,000 to $12,000 this year. I can't pay them. I don't want to pay them. That's not what we're talking about. We're talking about value with the appraisal districts. The taxing entities then in the fall set those tax rates. You can't directly control the tax rate. Now, you can control the overall rates in some or impact them through your vote, through who you vote in, through what budgets you vote for. If they have some rate increase meetings above certain thresholds, they require a vote. So you can vote on the overall rate, but as far as controlling the actual amount that you're taxed on your property, you have more direct control on the value, and then that rate is applied to the value. So we're going to talk about how to protest the value with the county appraisal districts, not how to impact the rates. Though I would strongly encourage you to go attend those meetings. Nobody ever shows up to the taxing entity meetings. And if people show up and demand some accountability, then perhaps things would change on the rate side as well. Here's our calendar, and this is the same calendar every year for your property tax process in Texas. So every year, every single piece of property in the state of Texas is revalued as of a January 1st valuation date. So what that means is all the, I'm going to call them appraisers. We call them appraisers who work at the county appraisal district. Outside of Texas, sometimes they're referred to as assessors, but that in Texas is a little confusing on terminology because our assessors are at the tax assessor collector office. The appraisers work at the county appraisal district. There are also third-party appraisers that you might have with your house, that kind of thing. We're talking about the employees of the appraisal district valuing your property. So they value every piece of property in their county as of January 1st. You don't actually see that value until about this time of year, until about the April timeframe, but everything is applied to the value as of January 1st. So that is important in some cases. So for instance, say drastic scenario, on January 1st, I have a $400,000 house. On March 15th, it burns down and I just have a lot left, just the land. If I come in and say, hey, you valued this April 15th as if it's a $400,000 house, the law defines your date of value as of January 1st. There was still a house there. So that would apply for the next year, depending on what happens, but it's everything as of January 1st of the tax year in question. Then around April 15th, you'll get your valuations. So that's what's happening right now. Hopefully you've gotten your valuation notice of appraised value in the mail. If you haven't, the address could possibly be wrong. It could possibly have gotten lost in the mail. Do not rely on that for a reason not to protest. There are avenues to say I didn't receive it, but that's really tricky. Just take the initiative to go online, and I'll show you how to find those websites if you don't know them, and find your valuation notice there versus I didn't get it, because it's a lot more work for you to prove that than to just make sure you meet your deadlines, because deadlines are everything in your property tax valuation process. And typically that deadline to file your protest is May 15th. May 15th or 30 days after receipt of your notice. Again, technicalities there, just file it. If you're listening to this here in April and you want to consider filing a protest, just go ahead and do it. You can always withdraw it. You can always say, hey, I'm good. No change in value is fine, but make sure you meet that deadline. So go ahead and file. And I'll talk about how to do that. And then from now, April-ish through June is when you're meeting with the appraisal districts informally, trying to negotiate your value. And if you can't reach a resolution, going to your formal hearing on value. If you go to a formal hearing and you don't like the result, you have 60 days after receipt of your board order determining protest. That's the document that says what the final value is, to either file litigation or arbitration. A lot of times for residential properties, that might not be worth it, but sometimes it would, depending on what the value is and the value in dispute. And then that second part of the process is where those taxing entities come into play. So after values are certified by the appraisal districts in July, the taxing entities, the school districts, the cities, they meet, set their budgets, and then determine what the tax rates will be. So in October, you'll get your tax bill, which will be a result of the value that we're talking about here, that you've protested and gotten to a great value, and the tax rate set by the taxing entity, and that'll be your bill. If the taxing entity wants to increase the tax rate more than a certain threshold, they will have to have an election. So then your tax bill will either be delayed or revised after that November election. Now you don't pay, or you don't have to pay your taxes until January 31st of the next year. So we're in 2026 right now. Your tax bills will be due by January 31st of 2027. And on February 1st of 2027, they're late. So don't be late. Make sure your deadlines happen on both protest and tax payment. This is just showing you kind of how it works on the budget, the taxing entity side. So they put their tax rate theoretically based on the money they need and the money that's out there. So the value, the levy, the budget that they have divided by the value of all the properties, it's going to be your tax rate. So if values in a certain taxing jurisdiction are going up, theoretically the tax rate would go down. It doesn't always happen. Sometimes the budget goes up, right? But that's the basic algebra of how it should work. And again, this is the forgotten 50%, because a lot of times our dear friends at the county appraisal districts are just their doors are being knocked down by people who are upset about how much taxes they're having to pay, understandably. But those people a lot of times don't go show up at those local taxing entity hearings to protest the rates too. So let's talk about the value, but we're trying to get to a market value that I'll mention what that means. That's a reasonable value, and that's what the county appraisal district appraisers are trying to get to too. But we also have that tax rate on the other side. So those are two parts of how much you have to pay in taxes each year on your properties. And this process is set up where you can have success, but where a lot of people lose money is, one, just accepting their appraised value without review. They don't even look at it. Hey, it is what it is. Taxes just keep going up. Uncle Sam keeps taking my money. Okay. Did you look at it? Did you see what you could do? So that's a big money loss that you could potentially in an hour or two get relief from. So not filing protests, again, just protest, be aware. If you have a case, then let's pursue it. Missing exemptions, that's a topic for another video, but making sure if you have exemptions that you can put in place, those are big tax savers. So the biggest one is your residential homestead. If it is your primary residence, make sure you have a residential homestead exemption in place. Your driver's license will have to match your address, so make sure you have that and can submit the paperwork through the county appraisal district. But it gives you a lot of exemptions in place against your taxes, and it also caps value increases when values are going up to 10% a year. So important to put that on there. Also, if you have agricultural exemptions in place, make sure you get those on as well, and any documentation that is required. And then just not being aware of what's going on, not tracking yearly changes in your values, yearly changes in the market. Like right now, we used to 5 years ago, it was just kind of assumed, well, the market keeps going up, values keep going up. That's not the case anymore. Particularly, I'm in the Austin area. Residential values are not going up. So if I get a notice of appraised value on one of my properties and it's, the value remained flat. In the past, maybe it's like, okay, I don't want to touch it because the value remained flat, meaning didn't go up or down. But right now, no, the value should be going down on some of these because of the market evidence that we have. So being aware, and if you need data, having a real estate agent that can pull some of that data for you is really helpful. All right, so what do we do? Step one, review your value. You got to know what your value is. You should be able to know that by today, unless you're in a really rural jurisdiction that's late getting their values out. Start here every single year. This time of year, every year, expect your notice of appraised value in the mail. If you don't get it, go looking for it online. Compare that value to what recent sales, we call those comps, are doing. You can again, real estate agents have the best access to actual sales sold data through that MLS. if you have someone, usually the agents will pull some, it's real easy for them to do to pull your list of sales comparables and just send it to you. And then, hey, kind of a marketing effort for them. So I would reach out to some agents, to see if they can pull some sales comparables. You also, when you do protest, you will request the appraisal district's sales grid. So you'll get the information that they're using and kind of see if it's actually applicable or if there's some sales in there that maybe aren't the best. You can look online on your property description if there's any errors, if the square footage is wrong, if there's some upgrades that have been noted or not noted, depending on what's happened, and also look around in the neighborhood. This is another avenue of appeal that we discussed called equal and uniform, meaning how are you valued in comparison to your competitive set? If you're in a traditional neighborhood, looking at the houses around you kind of thing. So this is where the information is. Every appraisal district has a county appraisal district website, so you can literally just Google whatever county you are. So Travis County Appraisal District, and you'll get there. These are the direct links, but you'll be looking primarily for your property search. That's where you can enter your address or your ownership name and pull up your property information so you can see your value, square footage size, land size, any exemptions in place, and just verify that all that's correct. And then you also will want to go to the owner's portal if it is available. It's easiest to file protest through that owner's portal. Most jurisdictions have that available now, not all of it. So there's the same thing for Hayes County, Hayes CAD, but you can just Google it and then Google the owner's portal too. Comal, Guadalupe. So just find that appraisal district website. It's got a lot of information that will be relevant. Step 2, file your protest. Unless there's some drastic reason not to, for instance, you just bought your property for $800,000, they have it on for $200,000. Okay, maybe you don't want to file. But otherwise, if you're kind of close in value, it's worth it to just file. Then you can get more information from the appraisal district. You can always withdraw. If you go to a formal hearing, you can no longer have an increase in value as a result, so that's positive. The appraisal district can always re-notice for a substantial error in valuation, meaning in that scenario I just said, bought it for $800,000. If somehow they were queued in, they could say, hey, we missed it. Or if they missed a whole, you've got a guest house, they missed that, they can always renotice. So sometimes people are reluctant in that scenario because they don't want to trigger an additional look at the property, which, that could be valid. But the appraisal district could look anyways, or the following year could find out. So it's always nice to have information up front so you're not shocked by a renotice. Know your deadlines. This is key because you miss a deadline, it's really hard to backtrack. There is a late protest option, but it has a lot more thresholds and hurdles and a penalty on it. So just protest on time. May 15th, mark it down. Just do it tonight. Get your protests in. Don't be late. File online, in person, or by mail. The easiest option in order to just get all the data out there and get offers pushed through and scheduled is online. So that's that portal. And I'll show you kind of what that looks like. If you can do that, do it. Otherwise, you can download a form. They'll send it to you typically in the mail with your notice of appraised value, or you can go on the website of your county appraisal district and just search for protest form. The Texas Comptroller has them as well, and mail that in or take it in person. On the form, you can select reasons for protest. If there are things that are wrong, like a missing exemption or square footage, obviously mark that. But if you're just protesting the value, I want you to mark market value is too high and unequal appraisal, and I'll explain why. So here's that notice of protest document if you're filling it out and either mailing it in or taking it in person. Again, you can look on the County Appraisal District's website and Google property owner's notice of protest, or go to the Texas Comptroller site, or just Google this and fill out the form. The easiest way is to e-file through the portal if you have a PIN, P-I-N, from the notice of appraised value. So when you get that document in the mail, it'll have an owner's number and a PIN number. And if you go to the County Appraisal District website and search owner's portal or e-file, you can do it on their portal. You can protest all this information on the portal, but you'll need that PIN. So if you don't have the PIN from the document, if you didn't receive the actual document, call the appraisal district, email them, try to get that PIN because it's the easiest way to do it. But if not, and you're pushing against the deadline, just do the form, take it in, mail it in. If you mail it certified mail. And if you take it in, ask them for a copy, they'll stamp it, they've received it, copy, just in case anything happens that you can prove that it was received on time. Here's an example of the online portal, Travis County Appraisal District, just public portal. If you've logged in before, it's easy. If you're logging in for the first time, it's still easy. Make an account, use that PIN number, and then file your protest. Okay, so when we're talking about remedies, this is what I mentioned a minute ago. Just obviously all those other exemptions, incorrect information are important, but if you're just looking at the valuation, the two primary remedies in Texas are excessive appraisal, which is market value, and unequal appraisal, which is equity. Excessive appraisal is based on sales, so typically for homes, appraised value exceeds market value. And then unequal is how you're appraised or valued in comparative to your competitive set. So how did the appraisal district look at your property compared to everybody else? Are you up here and they're down here on a value per foot? Okay, theoretically the law could be this, but we want to do this, right? Okay, so market value, that's that first one, the excessive appraisal market value. When we talk about market value, we're talking about the most probable price in a competitive and open market. So the buyer and seller are typically motivated, neither is under duress. It's not like a seller who is going through foreclosure and it has a bottom level pricing. Both parties are well informed and advised, reasonable exposure time, non-related parties. So it's not like I'm selling to my sister for $1 and then she comes in with that dollar sales price and wants that on her taxes. That's not a market value for the property. And for market value for all properties, there are three approaches to value. There's an income approach, cost approach, and sales comparison approach. For residential properties, 99, well, maybe 90% of the time, we're looking at sales comparison, which is what did comparable properties sell for. Now, if you have a new construction or a renovation, you might be looking at cost. And if it's helpful to you, like if you did have a new construction property, you spent $400,000 building it, the land is $100,000, and the appraisal district has you on at $700,000. Okay, well, we can get to 5 with the cost theoretically. Here's an example of a sales grid from Travis County. So when you file a protest and ask for their evidence, they'll send you the sales comparable grid that they have with the sales they put on there and the adjustments they made. So you can use that to look to see, hey, this sale makes sense, this one doesn't, or I have some extra sales. A pretty effective strategy when you're talking to the appraiser informally is bring in some extra sales. Again, use a real estate agent to pull some sales from MLS. And if they can add them to their grid, which a lot of times they'll do, and it lowers the value, then in many instances, they will let you have a lower value via the market approach if you're bringing that evidence to them. And then the second avenue is unequal and uniform. So that's just basically how am I valued in comparison to my competitive set. So that is looking at the data that the appraisal district has. So if you pull up the appraisal district website, your property, click on the map, you can kind of look around and see the properties that you know are comparable. Look at them on a value per improved square foot basis and how that compares to your property. You will also get in your evidence packet from the appraisal district their equity analysis so that you'll see which comparables they use, what adjustments they use to get to their equal and uniform value. And sometimes just getting the evidence, so say you're valued at 400,000, sometimes you'll see, okay, the sales analysis supports 400,000, but the county's own equity analysis says 375. And you might be okay with 375. So you can meet with them informally and say, hey, any way you can give me your own equity analysis number? Sure. And that happens a lot. So that's an easy win. Okay, so that's step 2. Step 3 is building your case. So evidence wins. Again, comparable sales, get your agents to help you. Looking at equity comparables, you can pull that from the appraisal district websites. If you have any sort of deferred maintenance or repairs needed, say roof damage or something that needs to be fixed and you have repair estimates, that is very persuasive, as well as photos. If there's reasons why your property should be valued less than some of the sales comparables or equal and uniform comparables, and you can visually show that, not only is that super persuasive when you're meeting informally with an appraiser, but if you can't reach a resolution and you go to a formal hearing, your hearing is before a board of typically 3 to 6 citizens, so your neighbors. Photos are super persuasive. So if you have that and it supports your case, bring it. Now, if yours is by far the nicest house of all the comparables, we don't want to highlight nice. We want to look at that negative perspective for property taxes. So photos when they help, not when they hurt. And then step 4, you're going to want to meet informally with the appraiser. So If you can do that online via phone, you can go in and meet with them and just get to know them. It's great if you can meet face to face. That's a little more time commitment, but either way, you're going to talk through why you think the value should be different from what that appraiser has the value on, and provide evidence. Try to help them make the decision easy, because if you reach a resolution here, you're done and everybody wins. So again, it's just negotiation. This isn't meant to be confrontational. This is not meant to be you screaming at them about your value. That's usually not very effective. And by the way, a lot of these people stay at their appraisal districts for a long time. So if you get that reputation, they're probably not going to want to help you out in the future. So just be respectful. Try to come in with a heart to reach a resolution, not a heart of anger about how much money you're paying in taxes. And if you make a connection with the appraiser, that's great moving forward in the future, and then you'll be able to work through your values and reach positive results. If you cannot, however, reach a positive result that works for both of you, go to a formal hearing. Sometimes that same day as your informal, sometimes you'll schedule your informal in advance, and then you'll be scheduled for the formal hearing later. You can do your formal hearing in person, via telephone, and in a lot of cases on a video conference. I would highly recommend, it's always best to be in person. That's a lot more time commitment. But think about this board sitting there all day, every day, and they see the same appraisers all day, every day sitting there. They build a relationship with them. And then, especially if it's just a phone call, all you are is a voice that can't even take the time to come in here. They might not be as likely to side with you in that scenario versus if you came in, sat down, get to know them a little bit, they're more likely to want to help you on your case. That's just the reality of connection. Second best is video, so they can at least see your face. And then if you have to do phone, you have to do phone. But you want to keep your case simple, factual, and unemotional. Again, coming in saying, I cannot pay these taxes, I can't afford it, I'm on a fixed income. While they might relate, because a lot of them might be on fixed incomes, they're like, we have to pay them too, though. So just bring facts, bring photos if you have them, bring sales. Make your argument persuasive without the emotion of, I'm just an upset person about my taxes. I want an actual case, because they are charged with finding the appropriate value for your property, and they need to have reasons to do so. So don't be argumentative, present evidence. It's a panel of your neighbors. Again, common mistakes in this whole process are missing your deadline. Don't miss your deadline. If you think you might want to protest, go do it tonight. Showing up unprepared. If you just come in and say, hey, I don't like the value, you're not as likely to get a good result as if you do a little bit of research, figure out what those comparable sales are looking like, figure out what the data the appraisal district has, and come in with a case. Also, don't overestimate your property value. Again, we're through a negative lens here. We don't want to be drastically low. If you've got a $500,000 house, we're not going to say it's worth $100,000, because they're going to dismiss that most likely. But you also don't want to see it through the lens of a real estate agent trying to sell your home, where they're always on the positive. It's always higher. You're going to take a more negative perspective. So don't overestimate the value. Don't miss exemptions. If you should have a homestead, make sure your homestead's in place. If not, take action today to put it in place. Same with an agricultural exemption. And protest every year. Unless there's a big reason not to, go ahead and go through the process. Even if you get $10,000 off your value, that's money saved that you would otherwise be paying the government. And again, this is just one lever in your financial strategy. So taxes, debt, spending, investing, income, all of this is part of your overall financial picture. And winning financially is not just about one of these moves, but it's about managing your whole system strategically. So the things we can control, the things we can impact with minimal effort and time, why not? Let's do it. But if you want to take ownership of your entire financial future, not just your property taxes, I have a quick self-assessment that you can take to just kind of see where you are falling on your financial health, your financial picture, and some recommended next steps to just move forward towards financial thriving and abundance. If you go to my website, rachelduck.com/resource hub, or it'll be a pop-up on there, you can get a link to the financial health assessment. That again, it's 15 questions, should take you about 5 minutes. Or just send me an email and I'll send it to you. In conclusion though, y'all, don't leave money on the table. Everyone here works too hard to overpay unnecessarily. So everything you're doing, property taxes, managing your debt, your spending, your income growth, just make sure you're taking your next best step to take ownership of your financial future. Thanks, y'all. Good luck out there.